Welcome back, Alpha Hunters. Hopefully you are having a very tubular Tuesday, because it is a tubular Tuesday. On the markets, we're not really doing a whole lot. We had a little bit of a gap down to start the day. About a 1/4% gap down, actually about a third of a percent gap down there. And it's just kind of, it got bought up pretty quick, and it's kind of been a slow, steady, bullish move on the day. Not really too much to kind of talk about. So they give us a time to talk about something else a little bit later about seasonality. Qs also had a nice little gap down, a little bit more bullish here. Currently up a little bit more than 1/3% on the day there on the Qs. So yeah, not looking too bad there on the Qs. IWM, nice little gap up, popped bullish, kind of rolled over bearish, popping a little bit here over the past 20 minutes. All right, currently up about a 1/4%. DIA is pretty much flat. A little bit of a gap down, just kind of chopping sideways for the day. All right. RSP, nice little gap down. Nice little pop there first 10 minutes. Steady pullback here over the past hour or so. Okay. So that's about how the markets are looking intraday. Not a whole lot of activity out there. The RSP does not look great. If it ends like this will not look great at all, right? You got the big sell down yesterday, and you got a little bit of a inside day low, upper wick. Yeah, that looks like it would be ready to break down if that held. DIA, yeah, basically flat, not doing a whole lot. Okay, not doing a whole lot. IWM, also, if it closed like this, would not look the best either. So, okay. Just have to see how some of these close, I guess, by the end of the day. Qs, trying to continue the market rally on the Qs. Still trying to do its best to support things. Is what it is. As everybody continues to try to flood into AI type areas or big tech areas, I guess. SPY still, I mean, look flat past week and a half or so. Basically just been flat. Not really doing a whole lot. It's been kind of volatile, especially Friday, just kind of volatile. But I mean, other than that, we haven't really been doing a whole lot there on the general market, which then allows us to kind of talk about seasonality. And the reason why I bring this up is the market outlook video from that I do weekly that goes out Saturday morning had someone ask a question: do you ever consider seasonality when you project direction? And yes, I kind of do, and I kind of don't. I mean, it's always a factor, I guess. You can always kind of take it into account. But the thing about trading seasonality is that cannot be the main thing that you're trading. If you trade seasonality, you would never kind of make money, I guess. A big reason why is the market never, I mean, seasonality, you've seen the charts of seasonality, and basically the way it kind of goes is, I'll kind of briefly kind of draw it out here. It's you get a little bit of a drawdown sometime in Q1, so something like this, a little bit of a drawdown to kind of start the year, January, February time frame. Then you kind of go on a run into about May-ish time frame, and then you just kind of chop sideways until you get to the back half of the year, and then you end kind of on a bullish note, kind of something like that. That's kind of seasonality. And honestly, it's kind of, maybe even the percentage might even be right, roughly. Let's see, how much is that up? About 12%. Yeah, I mean, that's about how you would end out the year, about 12% up. So that is roughly. Oh, you know what? That went to December. So my bad. Take it out to the right a little bit, like that. But that is roughly seasonality for the whole year, not through November. But that's kind of the way it looks, right? You get some kind of drawdown in the beginning of the year, as a lot of companies, a lot of investment companies, they have to pay taxes on gains and stuff like that, or they want to reallocate and they don't want to do it at the end of the previous year. They don't want to do it in November, December, and they would rather wait to the beginning of the year. Now, a big part of that, it's psychological. A lot of these trends are psychological, and a big reason why you get this drawdown at the beginning of the year, it has to do with, well, I don't want to pay taxes on it. If you liquidated assets November, December, I don't want to have to pay taxes on any kind of capital gains or anything like that in April when it's tax season, right? So they wait till the beginning of the year. That's why you get a drawdown January, February. Then you go on a rally through basically this towards the end of February, March, April, May, and kind of towards the end of May, it starts to peter out, and then you just kind of chop sideways for a few months. You have a little bit more of a drawdown, and that's about it. And then you kind of just steadily start to pop bullish out of it as you go into the end of the year. And there you go. I mean, that's kind of the way it is. You might have a little bit of a drawdown here, September, October, but it's nothing like it's not like anything to really write home about it. I mean, the trend just kind of stays bullish as you go, Q3, Q4. The trend just kind of bullish. Second half of Q3, Q4. But that middle part of the year, it's just kind of choppy. And a lot of this is just psychological, right? Right. We talked about the beginning part of the year. Companies, people are waiting to kind of liquidate positions to pay taxes on. They don't pay taxes on it in April. They'd rather pay taxes on it a year later. So they wait to liquidate positions, and they do it in January, February, and not November, December. So that's part of that drawdown. And then you get the the run back in, right? The capital kind of gets reallocated. People are paying their taxes. It's like all that pulling of capital out of the market's already done. So now the market just kind of goes on a run. Then you get to summertime, and the reason why summertime's kind of choppy, there's no real clear evidence on this, but my opinion, this is just kind of my opinion, I think it has more to do with this is travel season, vacation season. And so I think a lot of companies, a lot of people are just kind of pulling funds to go on vacation. I think that's what it has a lot to do with in the summertime. And so since you get a lot of asset managers also not in the office, they probably just tell their staff, hey, you know what? Don't put money into stocks. Our allocation is fine. We're going to leave it as is as of the end of May. And then we'll just buy short-term bonds. They buy like not even bonds, like notes, or not notes, T-bills. Monthly T-bills, and they just kind of roll T-bills out 2-3 months. Then they get to like July, August, September, and then they start to reallocate back into equities. And there you go. We get the run towards the end of the year. So that's kind of what I think, the summer has to do. I think a lot of people are on vacation, out of office, and asset managers are not really making allocation type decisions since they're not in the office. So they're just kind of rolling. They're just telling the traders that, hey, just roll T-bills, monthly T-bills until they get everybody's back in the office and do allocation. So that's kind of what seasonality is. My kind of my thoughts and what some of the psychology behind it. And when talking about, do you incorporate seasonality? Yes, I am aware of the trends of seasonality, but the other thing I'll say, seasonality is just long-term trends, really. If you just look at the SPX, we'll look at a 3-month kind of time frame here. Disregard the let me just take those off. The trend is bullish, right? So that's seasonality. But if you look at all these drawdowns, they happen throughout different periods of time of certain years. And sometimes they happen for a whole year. Sometimes they happen for like a month. And just depends if you're more highly deviated above the norm than the normal. I would just be a little bit more protective, not be as risky, I would say. And that's kind of it. I don't being saying sell is not, necessarily like say, hey, go bearish. It's not really the mindset I was trying to convey. The mindset I was trying to convey is, hey, you know what? We've had a very strong start to the year in 2024, and we haven't really had a significant pullback. Like the deepest one we had was this one back in April, and this was only 5.5% roughly. So, typically the historical norm 7 to 10% is like a normal annual pullback, the deepest pullback that you'd normally have in a year. And so, that's it. That's it. We're not seeing great flow. Like, we're not seeing a great amount of diversity of bull market trend stocks, like a majority, like the RSP. The RSP is not really participating. It participated back in November, December, but that's about it. All right. No, November, December. Oh, whoops. I zoomed out a little too far. All right, November, December. A little bit of February and March, but other than that, like it really hasn't. January didn't do a whole lot. And it doesn't look good here recently. Like this very much looks like it wants to break down. So that's kind of where, we could definitely see a little bit more of a pullback. Maybe just a rebalance of equities as we continue to see the top tier stocks, the top tech stocks continue to have crazy allocations put into them. So that's really all I kind of wanted to say about seasonality and stuff like that. It is something that you should be aware of. But the other thing I would say about seasonality is, like, if you're not worried about moves over the next month or two, like you're bullish. Like, what does it matter? Like, it doesn't matter. But like if you're looking at this every day and you're looking for maybe some shorter term type of trade ideas or asset protection and stuff like that, then you should probably look at some of that stuff. But seasonality doesn't really mean anything because drawdowns happen all different times of the year. They have, and I'm talking about like major ones. Major drawdowns have happened all different times of the year, and it's not one that certain time of the year this drawdown will happen or anything like that. No, they've happened all different times of the year. So seasonality is it's something that when you take it into aggregate all the years, that's kind of the way it looks. But is it like the end all be all to how the year flows? No, absolutely not. Towards the end of summer, going into the end of the year, that is a very difficult time period to be bearish because there's a lot of capital that starts to flow into the market towards the end of the year. So that's all I really wanted to say about seasonality, and we'll just kind of continue on. But seasonality is something to kind of just be aware of, but it's not the end all be all. All right, VIX pulling down a little bit today. All right, yeah, that's not really doing a whole lot. Still just kind of hanging out in the lower teen area. DXY, nice. We did have that nice little lower, I mean, substantially lower wick yesterday. So we'll see if we get the bounce. It looks like we tried to bounce. Let me go to intraday. We tried to bounce and we kind of failed that early this morning. Okay, we'll see what happens there on the DXY by the end of the day. It's still holding above the 10 EMA. So the 10 EMA might just continue to push this higher. It's had 4 days to rest above it. So it's not looking too bad. GLD Gold Trust, just hanging out, man. Just hanging out. I wouldn't trust this thing bearish at all. I would just be buying any dips. If you get a quick pullback, be bullish on it. 10-year yields. All right. We'll look intraday. So we had a quick pop around 9 o'clock, but, it's resting. We've had three of the previous 4 days were pretty strong. yield days. It did not hold over this high back on June 10th. It did not hold above that yesterday. Obviously, it wicked above it. So I might just rest here. I mean, those are pretty strong days. Yields don't move typically super strong like that. So we might see another rest day or not. But if it pops again tomorrow, I mean, yeah, we're going to be bullish on yields. Yields will be bullish, maybe not bonds. So yields still looking pretty good. 10-2, man. Still 10-2, still looking kind of strong here. And give me 1 second. Let's take a look at what data we got this morning. So we saw that we did get a pop around 9 o'clock. Some manufacturing index data. I haven't really heard of this Richmond Fed Manufacturing Index. I don't know if the market was kind of reacting to that around 9 o'clock. Well, yields apparently did. Home prices year over year was up 6.3%. Red Book year over year 5.3% compared to prior was 5.9. So there's some economic data. Not a lot of, to me, not a lot of like majorly important ones. Let's take a look. What's going on for the rest of rest of the week? We got energy stuff tomorrow. Obviously, always every week we got that EIA stuff. Some bond auction stuff. Ooh, we are going to have some GDP data Thursday. Core PCE prices. No, continuing jobless claims. That's the weekly stuff. Durable goods. Got a little bit of that coming Thursday. Not a lot of stuff until we get to next week. Yeah, still just some bond auctions. And then PCE. Okay, we'll get some PCE, some inflation data Friday. Personal income, personal spending as well. But yeah, next week we will start to get into, towards the end of the week, we'll start to get into earnings with financials and a few other companies. But then we'll also get, I think, CPI next week. Actually, don't quote me on that. Don't quote me on that. I'm not totally sure off the top of my head. I don't know if it's next week or the week after. HYG, trying to pop bullish here. I think we had the big breakdown the previous 2 days. I think bonds are maybe in a tough spot. Oh, you know what? I just spotted something on the LQD, and I wanted to see. It's not really there. So what I was just kind of noticing on the LQD that, so HYG kind of has this like upward line support. That was, so we broke that down yesterday, Monday. LQD kind of has something maybe like that. Let me see if I can move that over. Maybe something like that. We'll see if that holds. I mean, you also have this from this low and that spot. So it could be a resistance now coming up if you take it from that spot. So kind of some different ways to kind of look at it. TLT also kind of has, good grief, man. Kind of has one like that, like right there. So maybe the TLT would kind of save bonds here by bouncing off that kind of upward trending line. We'll find out, I'm sure, pretty quick. But yeah, bonds had a pretty bad breakdown day yesterday. All right, let's take a look at sector rotation real quick. Discretionary is looking pretty good, up 1.25%. I want to take a look at Amazon and Tesla. Financials, real estate, staples, utilities, communications, and industrials kind of all outperforming. Industrials kind of in line with the market there. Energy's kind of in line with the market as well. Materials, tech, and healthcare underperforming on the day. So discretionary is actually doing pretty good. All right, I definitely want to take a look at 2 stocks then. Discretionaries and tech doing pretty good intraday. So, tech got the hit with that gap down. But, you can see that buy up that they had there for the first 15 minutes. Tech Looking pretty good. Financials outperforming. Communications kind of in line with the market there. Industrials, staples, materials, utilities, real estate, and healthcare all underperforming. Energies at the lower end of the intraday. Definitely got hit with a pretty good sell down here for the past 40 minutes or so.